Hey guys, Scott here. Alright, let me get you up to speed if you haven't been watching the economic numbers closely, because the new inflation data just dropped and it's completely flipped the market. Not because it's obviously good or bad, but because it's not what the market was bracing for, and it's definitely not what the big banks were expecting. And here's what's crazy. Over the last couple of months, the story keeps changing. At one point, we were told rate cuts were coming. Then inflation popped back up and suddenly it was all about rate hikes. And now yet again, inflation has surprised everyone. If this keeps going, I wouldn't be shocked if the banks go back to their offices, rewrite their forecasts, and tell us the RBA might do the opposite of what they were just predicting a few weeks ago. So stick with me. In the next few minutes, I'll break this down in plain English. I'll show you what the new inflation numbers actually were, why there are two different inflation numbers and why they mean very different things, and what this does to the chances of the RBA moving rates in February. And then right at the end, I'll tell you what this means for buyers and investors, because this is where people get distracted and make expensive mistakes. And quickly, I do these videos daily. If you want daily updates on what's happening in the property market, what's happening in the economy, and what it means for your next move, hit subscribe and click the bell so you don't miss an update. All right, let's get into it. So first, let's talk about the numbers themselves. The latest inflation data shows headline inflation is now sitting at 3.4%, down from 3.8% the month before. That's a bigger drop than most economists were expecting. Now that's the number you see in their headlines, but it's not the only number that matters. There's another inflation number the RBA pays much closer attention to, and that's the underlying inflation number. This number strips out the really volatile stuff that jumps around month to month. That number also eased, coming in at 3.2%, down slightly from 3.3%. So on the surface, inflation cooled more than expected. That's why the market paused and said, hang on, maybe the RBA doesn't need to hike after all. But before you jump to conclusions, you need to understand why these numbers keep moving around. Here's the simple way to think about it. The headline number moves fast. It reacts to things like fuel prices, electricity bills, holiday travel, and seasonal spikes. The underlying number moves slower. It tells the RBA whether inflation is actually sticking around or slowly coming back under control. Right now, both numbers are still a little bit above the RBA's comfort zone, but the direction does matter. The honest takeaway in this, inflation isn't moving in one clear direction anymore. It's bouncing around, and that's why one data release can completely change what people think the RBA is going to do next. That's why you've seen banks flip their forecasts so many times. So why is this data so volatile right now? Well, a really good example of why inflation jumps around is electricity. In October, electricity prices looked extremely high because government rebates had rolled off and ended. So the annual comparison made prices look like they were exploding. Then in November, the timing changed. Rebates and comparisons shifted, and suddenly electricity inflation looked much lower. That doesn't mean power bills suddenly became cheap. It just means the timing of rebates changed how the numbers looked. This is exactly why the RBA doesn't overreact to a single month of data. They want to see the bigger picture, not just one noisy reading. So what does this all mean for the next RBA meeting? Right now, the odds of a rate hike have faded away a little bit, but they haven't completely disappeared. Some banks still think the RBA could hike as a precaution. Others think rates will stay exactly where they are. The key point is this: the data hasn't given the RBA a clear green light to hike, but it also hasn't completely ruled it out. We're in that awkward zone where inflation is easing, but not fast enough for the RBA to feel completely comfortable. That's why even the RBA itself sounds very uncertain. Inflation is volatile, the monthly data is still new, and the signals are mixed. Now this is the most important part. If you're getting caught up in predicting what the RBA will do next month, stop. Even the RBA doesn't know for sure right now. Whether rates move up or down by 0.25%, it doesn't change the big picture. There is still a severe housing shortage, demand is still rising, and government policies are already actively pulling more buyers into a market which is short on supply. If you're a buyer and you've saved 5 or 10%, don't sit there grinding for a perfect 20% deposit while the market keeps moving away from you. Get in now. Don't wait on the sidelines while everyone else rushes to make full use of the lending windows and government schemes. If you're an investor sitting on the sidelines hoping the next RBA meeting delivers a bargain, remember this: bargains don't show up when everyone feels comfortable. They show up when sentiment is messy. And right now, you actually have more negotiating power than you will when the next wave of buyers floods back in. If you can't buy where you live, rent where you live and buy where you can afford, but you need to get on the property ladder. There are still pockets in the 700K to 800K range if you're prepared to look wider. And if you haven't saved enough yet, trust me, I've been there too. Keep going, stay disciplined, put your head down. The moment you've got 5 or 10%, start figuring out where you can buy. The sooner you get in, the better it is. In today's market and in the market over the next 5 years, the sooner you get in, the better. Now, I do want to hear from you. What do you think is going to happen next with the RBA? Do you think they hold through 2026 or are they expecting one more hike? And how is that impacting your decision right now? Let me know in the comments. If this helped you cut through the noise, make sure you hit subscribe and click the bell so you don't miss these updates. And remember, this is your daily property update, your 5 to 7 minute update on the property market every single day so that you can be a property insider. Take care.